Good morning, this is Meir Valensky with Driving Markets, driving while talking about markets. Let's kick off. Right, so on Friday, the non-farm payrolls came in much higher than expected at 216,000 jobs created in the US. Unusual because business volumes are down. Now, most of that number, at least 50%, is made up of non-productive jobs, which is healthcare, nursing, welfare, social welfare, and social benefit jobs. So there's non-productive jobs, or at least 50%. The other jobs are varied in between productive and service industry. So the number is high, but what was concerning was the hourly wage inflation, which jumped. And yet the Fed is looking to reduce interest rates in 2024. The central bank in the US, the Federal Reserve, is looking to reduce interest rates by at least 3 times. At least 3 times. The markets have priced in 6 times, 6 rate reductions in the US in 2024. Why would the Fed look to reduce interest rates when inflation is running sky high, or at least wage inflation is running sky high? And what you have now is you've got underlying inflation also increasing. So something is suspicious. The Fed knows that the economy is going into a recession, and that's why it's taking draconian action, exceptional action, unusual action to reduce interest rates in 2024, because it knows that if it doesn't, then its economy is going to sink and the stock market is going to crash. Normally in a recession, stock markets go down by 30%, 30 to 32%. And now there's an election year with Biden and his cronies on the hope that they're going to get back into the administration. They're doing everything possible to fool the public and make out as though the economy is doing well and the stock market is doing unbelievably well, with your pension, investment and trust funds all sky high. It's all a complete lie. What they're trying to do is they're trying to fool the public. They're trying to fool you and I that everything is under control. It's not. There's going to be rising inflation in 2024. There's going to be a falling stock market in 2024. And there could be even rising unemployment, in spite of all the efforts that the US Treasury, the Fed and the Biden government and the Bureau of Labor Statistics is doing to try and hide the real numbers. What's going on in the number one economy, which will impact the rest of the world, is that it is sliding into a recession. And that recession will impact, obviously, the Western world, including Europe, UK, Canada and Australia, as it being the powerhouse of the global economy. So what you've got to look at is behind the numbers. Remember, in March 2024, the regional banks in the US have to repay huge amounts of money. This about circa at the moment 128 billion, may have gone up to 135 billion, who knows. They've got to return that, and not only do they have to return it, as yields rise on the 10-year treasury, it means their bonds that they're holding are falling in value, and that is going to impact the net asset value of the banks. So take all of these ingredients together and you have a pretty smelly operation being run by the Fed and by the Biden administration. Watch out for markets falling further. This is Meir Valensky with Driving Markets. Have a great day.